Kristin Cooper, your certified mortgage planning specialist, Finance of America. Wanted to go over this information. My goal as a mortgage planner is to make sure you're in the most cost-effective financing, that you have the right education and information to make the most educated decision for you and your family. So I wanted to go over what it looks like as far as waiting. So you decide you want to purchase a home, but you're thinking maybe I should wait, and what that's going to look like. So when we look over this information, and this is just using Sacramento County, saying we're purchasing a home at $400,000, putting 10% down. I can create one that's specific to you, but this is all going to be the same, showing you kind of what it's going to do. So let's just say today you got a mortgage. Let's say you qualified, great rates, everything worked out, got you a 4% interest rate, 30-year fixed rate mortgage, 10% down. Estimated payment, including this is the monthly interest and principal. You can see here you'd be paying $17.19 for principal and interest. So we want to look at the comparisons of how is that going to look the longer that I wait, and what factors do I need to consider. So one thing that we need to consider is going to be our appreciation. Appreciation is the amount that your home goes up year over year. So depending on the county that you're in, we have different amount of appreciation. So you can see here in this county, Sacramento County, anticipated for the forecast next year is 5.4% that it's going to appreciate. So what does that mean? Well, if you wait half a year, now that $400,000 home is worth $410,658. If you wait a year, now that same home you're going to have to purchase at $421,600. You wait 2 years, now it goes up to $444,000. Now it goes to $469,000. So you can see the longer you wait, and if you look at the last, several years, you can see the incline in appreciation of what you're going to be looking at. And the higher the price, the higher the payment. So you can see here that now we've waited 6 months. Let's assume the rate's still the same. So your principal and interest now is going to go to $1,764. It doesn't include your taxes and insurance. Now we wait a year. Let's say, okay, now we waited a year and interest rates are now up to 4.25. Well, now our payment goes up even more, because not only are we paying more for the home, our interest rate is going up, and now our payment's going up even higher. Well, let's say we waited 2 years and now the interest rates go up a little. And I'm being very conservative on the rates going up. I actually anticipate they may go up a little bit more than what's here. We'll see what's happening with the economy, but let's just say it stays at 4.5, or it goes to 4.5. Well, now you're paying $444,000 for the same home, and the interest rate's gone up, so now your payment's gone up to $2,025 for principal and interest. Well, now you waited 3 years, now you had to pay $469. Let's say the rate is lucky enough to stay at 4.5, your payment goes up to $2,140. So not only are you're losing the appreciation, but you're also now going to have increased payments. You can see your appreciation value goes up, so that's loss of equity. Your payment goes up, so now you're paying more. What does that look like? Well, let's kind of look and see what that's going to look like for your payment difference. For 6 months, $50 a month. So now your cash flow loss for the year is $598. Wait a year, now it's $155 a month. Wait 2 years, now it's $322, $446 a month. So you can see the longer we wait, the more risk we take of having a much higher payment, and the likelihood that we are. So you can see your loss of appreciation as well. So again, because you waited, now we lost that appreciation. So let's just say you wait a year. Not only are you losing $155 a month, you lost $21,600, in your appreciation, as well as your amortization loss. Your amortization is how much you've paid down in your loan over the term of how long you've had the loan. So your amortization is how much your home appreciates. Your appreciation, your amortization is how much you paid down. So you can see, just waiting 1 year, that first year, you are now down $27,940 loss in appreciation, amortization, and payment. You wait 2 years, now you've lost $57,000. You wait 3 years, now you've lost $89,000. So it's really important to understand this, not to be pushed along to make a decision when you're not ready, but it's really important for you to understand this, so when you do decide to buy, you're not surprised and disappointed that you lost out on all of the equity, amortization, and the payment is now higher. So again, if you have specific questions or specific scenarios, I'm more than happy to go over this. I just want you to be prepared and understand what this is going to look like, whether you purchase today or you purchase in a year or 2 years. Of course, once you're ready is when you want to decide to move forward, but you don't want to lose out on all of this financial wealth if you're ready to buy, just because you think that you want to wait for a little bit. So again, if you have specific questions, please reach out to me, Kristin Cooper, Certified Mortgage Planning Specialist, KristinLoans.com. KristinLoans.com. Hope you have a wonderful day.